In this video, we're going to talk a little bit about charitable contributions, otherwise known as donations. These need to be to 501(c)(3) entities, basically public charities. You can also do them to private charities, although there are different rules, which we're going to go over in the next slide, that pertains to what the deductibility of these two are. Overall, charitable contributions should be part of an overall tax plan, making sure that you're getting the full benefit of these deductions. There's a little bit of planning that needs to go on, which Tax Planner Pro can help you do to make sure that you are being rewarded for doing such a nice thing. And that has to do with the standard deduction and other things. So let's jump into it real quick. So why should you learn about charitable donations? It's an easy deduction, right? Give your money away and you get to write it off on your tax return. Recently, new legislation has allowed you to write off up to 100% of your adjusted gross income for cash contributions, which is a fairly large change having to do with the COVID bills that were passed. So think of it as if you make $100,000 a year, you could deduct or donate up to $100,000 worth of charity and write all of that off via your Schedule A. So that's a fairly large limit. It's in some ways almost limitless, right? You're not going to try and contribute more than you make. If you do, however, you can carry forward excess charitable contributions for up to, at least for cash contributions, up to 5 years from the day of the donation. So you can exceed these limits and carry forward the excess and deduct them on future years. It's important to know that things like deductions or donations, I should say, to political parties, to individuals, things like that, these are not charity, even if they are hurting. A charity that qualifies for this donation needs to be registered as such with the IRS and have the paperwork and give you a receipt for that shows that they are a registered public charity. Cash isn't the only thing that you can give away that counts as a charitable contribution. We've seen real estate. That is a very popular thing to give away, especially if it has appreciated. Same with appreciated securities, like appreciated stocks, things like that. You can give them away and not have to recognize the gain on those appreciated securities. Clothing, books, mileage to and from volunteering. There's a list here that is fairly comprehensive of what does qualify. So keep in mind that it's not always just cash. And as you can see in Tax Planner Pro, we give you some projected savings estimates. So we show you your current taxable income, what is currently showing in the projection for charitable contributions, meaning what the baseline projection is showing because you've entered it in the data entry. And then it's also showing you if you contribute additional amounts, what you can save. So it gives you an idea of if you decided to increase your charitable contributions from the baseline, what you could save in addition to what you're already saving by contributing to charity. Probably the biggest sticking point when it comes to charity is charity has to be deducted on your Schedule A. Now, there is a small amount that can be deducted outside of the Schedule A. For 2020, I think it was, or for 2019, I think it was $300. And for 2020, they've increased it to something like $600, which isn't a huge amount. We don't put it into Tax Planner Pro because it comes out to maybe $100 or $200 worth of tax savings, which isn't usually very material. But if you're contributing, say, $4,000 to charity, notice the two different scenarios here. If you itemize your deductions, meaning you have mortgage interest, you've got taxes, you've got charity, and your total itemized deductions add up to, in this scenario, $32,000, that is pretty good because you're getting the benefit of the $4,000 worth of charity because the $32,000 is more than your standard deduction, which depending on whether you're single or married is going to be either $12,000 and change or $24,000 and change. If you don't have any of those kind of expenses, you don't have any mortgage interest, you don't have any taxes, but you still contribute to charity, you're really not getting a tax benefit for it because your total itemized deductions don't pass or exceed your standard deduction of $12,000 or $24,000. And in some cases, that's where we would say you see charitable giving for many years lumped into 1 year. So let's say you normally give $4,000 a year, but you don't itemize, and you want to be able to eclipse that $12,000, so you get the benefit for it in 1 year. You might do 4 years worth of charity, i.e. $16,000 in 1 year, and in that 1 year get the benefit of it. And in the other 3 years, you take the standard deduction, if that makes sense. So just watch whether you're itemizing or not, and that will kind of dictate whether you're getting any benefit for it. So sometimes when people are in Tax Planner Pro, they'll be throwing in charity amounts and saying, why isn't this showing that I'll save money in that projected savings box? And that is because you're not itemizing deductions. So increasing your charity is not decreasing your taxes until they get so large that it eclipses the standard deduction. And for married couples, that's $24,000 and change. So you would have to contribute quite a bit in charity to get over that number. We wanted to include, how you can figure out who is a qualifying organization. There's a list on the IRS website where you can take a look at the different groups or who is a qualifying organization. Once you've decided you want to do this, it really is about sending them cash or the non-cash item that you're going to donate, and then make sure you get a receipt and enter that charitable contribution if you're doing it through your business and your bookkeeping. Otherwise, make sure that you've got a record of it for your individual tax return for your Schedule A. And then what do the professionals think about charity? It's got a very large overall strategy benefit. It does have a moderate audit risk, and that is because the IRS loves to take a look at /audit/review the amounts that you are showing you contributed to charity, because it is to some degree, until the IRS takes a look at receipts, it's on your honor. And so you will, if you've got very large amounts of charity in relation to your income, you will probably at some point, some year, have to prove that out and show them receipts, that kind of thing, so that they can kind of mark you as a known donator, I guess we'll say. And I've had several clients that have had it happen once, and then once they've proven it out, they don't really hear from them again. They believe what they put in there. As always, if you need more help, you can go to our forum or use our chat button in the lower right-hand corner of the software. And then there are some links in this planner if you want to research more about charitable donations and the charitable contribution deductions. As always, thank you for using Tax Planner Pro, and we'll see you in the next video.